everyone. My name is Betsy Law. Welcome to BMO Insurance webinar. In today's sessions, I'm thrilled to introduce 3 new faces, including myself, to all of you. As we all joined BMO recently, we really hope to bring you guys some new energy, new ideas about our products to your practice. Varshni and myself, we will be looking after BMO Life, and Nazia will be looking after BMO Investment. Without further ado, let's quickly scan through today's agenda. I know we only have half an hour for today's section, but I do think this webinar opens another door for us to meet further. First, we will have our own introductions, and I will highlight on our unique features on our universal life products. Then Varshni will be focusing on our whole life. And lastly, Nazia will be talking about our investment products. Okay, passing to you, Varshni.
Okay, so Betsy and I will both be looking after IDC, which is great for all of you. It means you just get more of us. How this is going to work is that Betsy and I will be split up by regions, specifically the 427. So I threw up a little helpful map here for you guys. So if you're located the west of the 427, I'll be your BDM. And if you're located the east of the 427, Betsy will be your BDM. This is for our life products. However, I know at times it can be a little confusing, so don't hesitate to reach out to any of us. We're a team and we're here to help you. Now I'll pass back to Betsy.
Thank you, Varshni. So just a little bit about myself. I have a dual degree in economics and math from Queen's University. I'm fluent in Mandarin, Cantonese, and English. I've been in the insurance industry for many, many years. You don't want to know. We pissed off at Empire Life and TD Insurance. I have substantial experience in product development cycle, ranging from product research and design to the pricing and marketing. As my experience accumulated, it became more apparent to me where my passion lies. As a business development manager, I can truly make good use of my educational background, product knowledge, and can-do attitude to support all of you. I love working with cases. If you want to know more about me and our products, please feel free to reach out. And I have my contact here. I'm passing to you, Varshni, to introduce yourself.
Okay, so I started off as an advisor a few years back, working within the family and the corporate markets. So to an extent, I understand the challenges that we face on a day-to-day basis trying to get our jobs done. However, what I loved about being an advisor was that there was something new every day, new people, new stories, new faces. I then transitioned into a wholesaling position with Specialty Life about a year and a half back, where I had the pleasure of getting to know a lot of you. And now I get to continue supporting advisors and doing what I love most here at BMO. Now I'll be passing it over to Nazia.
Thank you, Varshni. Hi, guys. My name is Nazia Iqbal. I'm the Business Development Manager for Segregated Funds and Annuities for Central Ontario. Before we start the presentation, I'm going to tell you a little fun fact about me for you to remember me. I love poetry. So when I say poetry, I actually mean I write poetry. It's a me time thing for me. And I've been writing it ever since I was small. It just relaxes me. So that's just a fun fact about me. So coming to Canada when I was 9 years old and seeing my dad struggle to find a job similar to what he was looking for back home was extremely hard to see. So the education system barriers always came in the way. And if it was not for savings, I'm not sure where I would be right now. And that's exactly why I like to speak to my advisors and clients, family, friends, and anybody out there about finances, investments, estate planning, savings, etc. The earlier you start, the better it is a very, very true statement that I had learned at a very early age. And in my presentation today, I'm going to talk about the BMO gift products and why us specifically. Back to you, Betsy.
Okay. Okay, so when talking about BMO Universal Life, I know we are already very competitive on the pricing, right? And also the numbers of funds we offer. But there is a unique feature on our Universal Life, which is called Annual Renewable Term Rider, or ART rider. I really want to introduce that to you. This ART rider is available to all of our UL plans. It's a low-cost option and guaranteed to be paid up at age 100. coverage up to 10 million. It's important to know this is not convertible, not renewable, okay? And I consider it is a great tool to have in your toolbox. If you have older clients who are looking for like short-term needs, they might face high-term renewal rate. Or if you have rated clients, you might consider our UL with ART rider strategies. So let's take a quick look at this specific case. This client, James, he has some concern with the high-term renewal. And he's 65 and will need 1.5 million coverage for 10 years. For most of the advisors, they will for sure think this is a direct T10 solutions. And James will need to pay almost $12,000 per year for 10 years for his T10. However, we can also structure it a little bit different with a smaller UL base and a larger portion of the ART rider. And using this strategy in 10 years, you could save almost $10,000 for this advisors, for this client. Now, after 10 years, if this client wanted to renew his T10, okay, the renewal rate is almost $70,000 per year. He could consider purchasing a new T10, which is a cheaper premium. If James has a good health at age 75, the chance is there, but I would say not very high. Or he can actually extend his ULART rider for another 10 years, which is only costs $48,000-ish. He will definitely appreciate you planned out the option for him 10 years ago. And I would say this is an unbeatable strategy. Okay? So when it comes to this type of scenario, I always encourage you to come to me. As I mentioned earlier, I love casework, and I would love to customize solution for you and your client. And if James changed his mind, he doesn't want to renew the T10. Instead, he decided to get a permanent coverage. What are the options now? He can either purchase a new T100, which costs over $90,000 every year. Same assumption if he's good health. Or he can extend his ART rider to H100, which is less than $85,000 per year. Okay, you save almost $6,000 for James every year. So again, I know this is not a straightforward rider, and I don't expect you guys to figure it out in the illustration right away. And I would love to connect with you on a one-on-one base to show you more details. And here again, this is my information, contact information. If you are the advisor located at the GTA North and East and would love to learn more about our products, feel free to connect with me. Okay, passing to you, Varshni, to talk about our whole life products.
Okay. So hello everyone. Today, welcome to our whole life product. So when we commonly think of whole life, we think of the big picture at the end, the cash values that are generated over a longer period of time. However, we saw a growing appetite to generate those short-term, higher cash values. And in order to cater to those needs, I'm happy to introduce to you one product, two plans. We have the Estate Protector and the Wealth Accelerator. So in the interest of keeping things simple, these two plans hold the same benefits. We have guaranteed premiums, guaranteed cash values, reduced paid-up additions, and a guaranteed performance bonus rate that is guaranteed throughout the life of the policy. We also have some additional payment options to guarantee premiums if the client wants to. Now, it's not uncommon that, clients' budgets change. They may have been able to afford that premium in the past. However, maybe business isn't doing so well. What we are able to do is we're able to provide flexible premium options with our whole life plan that also illustrate well in negative scenarios. So your clients can have the peace of mind that BMO provides those flexible premium options to adapt to their needs and be less volatile in an ever-changing economy. So now with two plans comes two different goals. Let's say your client Steve here, he is very sensitive to liquidity and he's looking to leverage some investment opportunities in the near future. In that case, the Wealth Accelerator is perfect for him because it's built to generate those high early cash values. However, it's also great to have options. If he's not too comfortable with the pay to 100, he wants to guarantee his premiums, he can take a look at the 10 pay or the 20 pay. However, maybe his wife, on the other hand, doesn't care too much about developing early cash values. Her main focus is generating and maximizing her estate protection. In this case, the estate protector is a perfect plan for her, as it will really generate those high-end cash values in the back end. So this is a chart that I would show Steve to help him understand how our wealth accelerator works. If you take a look at the solid blue line, that is our best product when it comes to generating the highest short-term cash values. It's a pay to 100 with max APO. So if Steve isn't too worried about how the cash values perform after, in the later years, this is the perfect plan for him to pick. However, if he's worried about guaranteeing his premiums, he can take a look at the 10 or the 20 pay, as it does have similar cash values, high cash values as to the 10 pay. However, it does increase over time in the later years. This chart shows you truly shows you what the difference between the estate protector and the wealth accelerator. You can see here that the estate protector truly does give you those higher long-term cash values, as it increases in significantly more than the wealth accelerator. Basically, we're giving up those short-term early cash values to really generate wealth in the long term. So a common concern that we get between clients and your advisors and clients is the unpredictability of the future. I'm here to show you that even though our products are less volatile and they don't fluctuate as much. So you can see in year 10, in the primary scenario, we're generating about $564,000. In a -1 scenario, we have a decrease of about 5%. And in the -2 scenario, we have a decrease of about 9.6%. What I'm trying to show you here is that our fluctuations are within a very narrow range. So this creates a win-win situation for you and your clients. Basically, you get to save yourself from having those potentially odd conversations with your clients when those cash values are not as high as they assumed so. We're able to withstand the shocks of the economy and provide pretty fluctual and less volatile cash value growth. So peace of mind doesn't just come in the form of less volatile cash values with BMO. It also comes in the form of clarity and simplicity. So our performance bonus rate is super easy to understand, and it's unaffected by mortality, expenses, and lapses. So I wasn't lying when I said it was simple. This is the exact same formula that we use to calculate our performance bonus. Instead of a dividend scale, we have a performance bonus rate that's given to you on an annual basis. This times a cash value plus additional payments gives you your exact formula. So I know most of us here are numbers people, so I'm not too worried about you. However, I know we work super hard to make sure our clients feel comfortable and they understand what they're purchasing. This formula just makes it that much easier for you to do your job. BMO's whole life product provides you a simple and easy to understand product that is customizable to your client's needs with our various premium options. And unlike any other whole life product, we guarantee what matters the most to provide a stable product that's advantageous even in adverse scenarios. So if you have high net worth clients, business owners, investors, take a look at our BMO whole life product, as it's a stable product that is less sensitive to adverse scenarios. So despite the ever-evolving world around us, our advantages actually remain unwavering. At the core of our strengths are 3 pillars: BMO Financial Group, and we have strategic partnerships with capital markets and asset management. So in other words, what this means is that the individuals or the experts that handle BMO's money is also handling your client's money. So if this is not peace of mind, I don't know what else is. Thank you. This is my contact information. If you want to reach out, you can scan my QR code. It'll take you over to our BMO website where it'll show you my contact information as well. And then I'll pass it over to Nazia.
Thank you, Varshni. All right, seg funds. So how seg funds can preserve and grow your business. So seg funds, what I'm going to be talking about in this presentation are 3 main things for BMO for you guys to remember: our ETF funds and ETF portfolios, our 3 guaranteed options, and our no-load sales charge, aka advisors chargeback. And of course, why me? Why us? Why BMO? All right. Seg funds and ETFs. So the combination is compelling, as you can see the efficiencies of the ETFs and the downside protection and other benefits of seg funds. We have a solution that provides you the benefits of both seg funds and ETFs. And that is our BMO ETF gift portfolios. What does that mean? It simplifies investing. So no need to have the hassle or the potential extra cost of trading all of the individual ETFs. This is an all-in-one solution. Expert oversight. So we provide professional management and ongoing rebalancing, meaning you work with your client to determine the right solution, and I'll take care of the rest. Diversification. Don't you put your all eggs in one basket expression. Portfolio solutions holding ETFs. Now we know that each ETF has over hundreds of holdings. And for us here at BMO, we have 7+ ETFs for each fund. So extensive diversification. Low simplified costs. So effectively the cost of the ETFs, admin, insurance, and advisors compensation, and that is it. So again, you can offer an all-in-one simplified cost structure. Maturity benefit guarantee, death benefit guarantee, creditor protection. And last but not least, avoid probate fees, cost, and time. So much less cost in a very little time in the event of the death of the client. Okay, our guarantee options. So we have 3 guarantee options: 75, 75, 75, 100, and 100, 100. So I'm going to start off with 75, 75. Wealth accumulators, professionals, or business owners for creditor protection. You could also say younger fee-conscious clients, or perhaps somebody coming from a mutual fund side and just starting off seg funds. But again, that may not always be the case, as lately we have been seeing a trend for older clients shifting from 100, 100 to 75, 75. Again, 75, 75, low fees, yet high equity content. Then we have our 75, 100. Mainly wealth transfers, meaning they're not worried as much about the maturity, but rather the death benefit guarantee. So these clients, we can say anywhere from 60-year-old to a 90-year-old. They want to maximize the wealth to transfer it to their heirs. So 100% death benefit guarantee, estate protection, and of course, lock in the market growth. And then we have our 100, 100. So that's our pre-retirees. So we can say anywhere from 55 to 65. Here in this category, they want to maximize their funds before they retire. Again, they want to guarantee everywhere, whether it's maturity benefit guarantee or death benefit guarantee. Now, again, I can guarantee you that if you put your clientele together or a list of clients together, you can have at least 3 to 4 clients in each category. I can guarantee you that. Please reach out to me and advise me of the situation, and I'll find the right solution for you. If the client currently is invested elsewhere, I'll create portfolio comparisons. If the client has funds sitting in their bank account and not invested, that's perfectly fine. I'll create a portfolio for you to present to them, fully customized. Again, connect with me for a deeper discussion. Navigating complex family dynamics. So keeps designated beneficiaries private, just like an insurance policy out there, fully private. You can name beneficiaries on a cash or a non-registered account, aka non-registered. Huge selling point out there. Mutual funds, we know you're not allowed to name it. Cash account sitting at a bank account, you're not allowed to name it. Unless we know for registered account, we all know that if it's a TFSA, RSP, we are allowed to name a successor, annuitant, or a beneficiary, etc. But under a segregated fund, if you have cash or non-registered account, you are allowed to name a beneficiary. Blended families. So if you have kids from a previous marriage, you can equally distribute it to the kids. Okay, sales charges. So we all know that the industry got rid of the DSC 2023, June of this year, rather. The industry is left with pretty much three, I'm going to say, sales charges. So the advisor's chargeback, which BMO calls it no load, front end, and F class. So what does it mean when we say no load? What are we talking about? So we BMO have two types of no load. No load 3, which is our 2-year schedule. Your first year compensation FYC is 3% on the deposits and 1% trailer in the 25th month. Now, one thing to keep in mind, if the client chooses to take funds out within the 24 years, it is prorated. It is not 100% chargeback. And then we have our NL5. So that is going to be our 5-year chargeback schedule upon withdrawals. Again, you can see the schedule here. Year 1, that is, you can see 100% chargeback. Year 2, 80%. Year 3, and so on and so forth. The advisor's compensation, first year commissions is 5% on the deposits and 0.5% trailers on the 25th month. If the client still has money in the year 6 or 7, the trailer gets bumped from 0.5 to 1%, again, in the 73rd month. Finding the right solution for your client is our job. Please reach out to us for any case consultation or any product information. I assure you that we will make it extremely easy for you guys to work with us to find the right solution for your clients. Our information will be sent to you. We want to say thank you for your time. We look forward to the collaborations. If you have any questions, please feel free to email it to us. And once again, any last things we want to add here, ladies?
Maybe we can spare a few minutes if there are any questions.
Sure.
Thank you very much, ladies from BMO. We really appreciate it. And everybody, we're going to end this session. You'll be brought back to the lobby, and then you can click on the join button for the next session. Okay?
Thank you, everyone.
so much.
Thank you.
Thank you. Have a great day.